What's going on, guys? Good morning. It is 10 a.m. Eastern Time, and we're about to go live. Just give me a quick sound check. Background music should be off. Should be good to go momentarily. I don't see anybody in the chat. I don't know why I can't see anybody in the chat right now. Top chat? How about total? How about a live chat? That's a live chat still. Oh, there we go. Okay, cool. All right, good morning. Good morning, good morning, good morning. We'll give it a minute. Give it a minute or two. People give some time to settle in. I am on 4 hours of sleep. Those were not successive. Those were separated. So, and that it didn't even feel like sleep. That's just technically the hours that I slept according to my Garmin. So, who knows what that means? Slight buzz. Yeah, I'm trying to get rid of that. Someone had mentioned the way that the wires are connected in the back of the computer, possibly leading to that if the microphone was. Let's change the screen. All right, what's going on? If the microphone was possibly plugged into some other outlet besides all the other devices that I have, like maybe the fact that the microphone being plugged into one outlet and then the computer and the speakers and all of the other stuff, all the other hardware being plugged into another outlet, whether that made a difference. The problem is, and so yeah, that's another thing. When I listen to the videos after the fact, which I don't listen to the entire video, but I'll just check in and make sure the sound was good and all that. I don't hear it, so it's only on a few devices apparently. But either way, it appears that that's not my issue because the microphone is plugged into the same thing, the same surge protector as the computer. But there are other things that are plugged in under the desk. I have a lot of stuff, and then not for nothing, with all of the hardware that I have, everything that I have plugged in, I then bound those wires together. So maybe that's an issue, right? I'm not a technical savant by any means when it comes to audio, video, computers. But I bound all the cables together just to keep it relatively clean looking. That's one thing that bugs me out. Having like really messy spiderwebbed wires. All right. Okay, give it another minute. How you guys doing? How's everyone feeling about the market right now? So I back to the live trading streams. Back to me just kind of calling it as I see it, talking through some of my morning trading sessions. If, just to be really clear, just to be honest, if the session was starting to pick up, I probably end the stream early. If the session started off really strong, I probably would cancel streams. I do want to stream while I'm trading though. So today looks like a decent day. I've actually put some points on the board already. Got 29 points in the NQ, in the NASDAQ. And yeah, the point of these streams is basically for you to just see how I'm trading live, what my thought process is, how I'm responding to changes. A lot of you end up seeing how quickly I change my mind, how that works out for me. And again, just to kind of think out loud, and then also to take advantage of the time in between trades to do basic AMA. And then today, I think moving forward, what I want to do is, because I'm always looking for like the best way to do these streams, because I do enjoy doing them and I do want to provide value. I think moving forward, what I'm going to do is I'm actually going to assign a topic to each stream. And what I want to do is I want to put those topics out in advance. So today's topic, I posted yesterday and I said something that was not entirely serious, but I said that market structure stops are stupid, or the stupidest stops. That's not the case, right? Necessarily on its own, it's not the case that, market structure stops are bad. But I do want to refine that and get into that. I figured that would gather some attention. So moving forward on the streams though, as well as trading and doing AMA, I will touch on a specific topic. And again, because I'm trading during the stream, because something might happen, it'll just be loosely touched on throughout the stream. So we might start off talking about it, things might pick up, and then we might get back to it. And it's, if anything, it's something that you guys can align your questions around, or at least align the AMA around, so that you're here and getting something out of it, and we could stay on, not get pulled all over the place, which is something that can sometimes happen on streams. All right, so before we get into it, be sure that if you have not already, you hit the like button, you hit the subscribe button. If you're not already subscribed to the channel, go ahead and do that. Put me on alerts. I'm trying to grow this channel again. Yeah, I take the summers off for the most part. We have we already scheduled 2 vacations, rented another beach house this summer. But I am online. Like I am on Twitter often. I still plan on streaming. It's something that I honestly enjoy doing. I enjoy trading. I enjoy interacting with you guys. I enjoy putting out YouTubes. I don't enjoy it as as much as a lot of other people do. I don't enjoy it enough to hire like editors and put out 5 videos a week and crazy thumbnails. And I just, when I can hop on, I enjoy hopping on. But I'm more of a casual kind of person, like just shooting the shit, keeping it natural. I don't want to make it artificial by I don't know, doing any kind of the other silly things that streamers do. That just isn't me. But subscribe, like, as a reminder, just formalities aside, before we get all of them aside, none of what I say is financial advice. If you're looking for a financial advisor, open up Google, set it to your location, and find one that way. I am just a trader. This is just how I am looking at the market. We're looking at the market through my lens. I'm offering my opinions, and that's it. I don't want you guys to take what I say as gospel. I don't want you to leave here and think that anything I say is, 100% etched in stone and concrete, because I am very nimble. I change my mind quite frequently. If anything, that is one of my stronger characteristics. And the problem with following other people is, I'm not going to be giving updates to all my positioning all the time. When I can, I do, but I don't want you to take positions and then, you have no idea that meanwhile I had to change a heart a half hour later, and then there you are, trying to doing what you think is following in my footsteps, and then ultimately again being left in the dark. And then, yeah, I think that's it. Okay, shout out to the sponsor of the stream, Bybit. Bybit's a phenomenal exchange. Bybit is now going 100% KYC. I mentioned this last week. I was one of the first people to mention it. I ended up deleting that comment because I didn't want to be the person to break the news. I wanted to let them break the news. Then again, after that, everyone else shared that they had heard it as well. But yeah, Bybit is going 100% KYC on May 8th. And here's what I'll say on that, and I've said this now ad nauseum for who knows how long. All exchanges are going to do this. This is just a matter of time. If an exchange is newer, they probably have a little bit more runway. They probably feel like they have more runway. It's not necessarily the case that they are guaranteed more runway, but they're more than likely, if they've been around for a long time, they're on the radar, right? So what you see and what I've seen over the last couple of cycles is exchanges are really popular. They gather a ton of attention, right? From some would say the wrong people, all right? But regulators and the likes, and then their hand is forced, right? So BitMEX is a good example. Binance is a good example. BitMEX is something that, went strict KYC before Binance. But then what happened? People left BitMEX. Other people took advantage of that opportunity and created different exchanges, right? And then those exchanges were not necessarily on the radar, or on, I should say, in the crosshairs. And they got away with not having KYC. And that there's plenty of exchanges that still, they don't require KYC. But they all will eventually be forced to KYC, or it'll be really difficult for them to remain in business. What I will say is that when they KYC, they're probably just going to continue to kick this ball down the road. They KYC, and I'm already getting messages from, just as being someone who is a larger account in the space, I get messages every day Yeah, culture horse. That's a good way to just get booted from the chat. When I take a trade, it's when there's an opportunity, not when, I'm not just sitting at the computer clicking buttons. That's why I have money and other people don't. So other exchanges will pop up. So I get a ton of messages from exchanges all the time that are just, no-name exchanges. All right, so Culture Horse wants to trade. So we'll talk about a few things first. Right now, as far as BTC goes, so you see I have a couple screens up. We have the NASDAQ, the ES, and then to the right you have Bitcoin contracts on the CME. So I ended up taking a couple trades this morning in the NASDAQ. So right here you're looking at a 1,000 tick chart, but just bigger picture-wise to show you where we are. Here's some daily context. The last 2 days, so you could see, Sunday session opening up smack center in the middle of Friday session. And again, these are 24-hour sessions. This is not just regular trading hours. And then we have Thursday session. There's a good amount of overlap between both of those sessions and where we currently sit. So this is an area where you would say it'd be reasonable to form a composite. Again, just more than 50% overlap in value. Thursday to Friday transitioning somewhat lower, but nothing extreme. But bigger picture-wise, if we just look at the chart on the right, I'll put on like a 4-hour chart. It was on a 1,000 volume chart. Still within a pretty large range going back to the beginning of the month. So if you look at like the ES, if you look at the NQ again being higher beta, a little bit more reflexive, more like BTC. BTC obviously being very correlated to the NQ. ES's structure is pretty ugly, honestly, the way that it's kind of just grinding and melting upward, not really building a base. I talked about having a pullback because the market moved up on just very minimal breadth, so you didn't have the support of the entire market. Most of the S&P, 70% of the activity is a result of like the top 4 or 5 pairs in the index. So you have Apple, you have Microsoft, you have Amazon, top 3, and between them, it's 15% alone, carrying the S&P. So when you look at the S&P, basically looking at the work done by Apple, Microsoft, and Amazon. And who knows how long that can persist. Ideally, we want to see, we keep talking about the same level with the S&P, 4,200, 4,200, 4,200, getting capped off there. Now, we were getting capped off there before OPEX, so last Friday. The Friday that just passed was OPEX, the third Friday of every month, unless it's a holiday. So as a big options expiry, there was a good amount of pinning that was taking place in the market. And this was due to options market makers, dealers, keeping prices pinned around 41 and 4,500. So that's done, right? Now we are in the last week of the month. I don't know if necessarily you're going to see a lot happen this week. It doesn't really make sense for a lot to happen in the end of April. End of April going into May, again, after OPEX. I think this is where, again, price will have more room to breathe because that pinning will be gone. But I wouldn't really expect anything massive this week. Obviously, that can change very quickly. But as you can see, we're still within a higher time frame range. So if you look at the month, right, it's very balanced so far. So we have a higher time frame rotational structure, no trending behavior really other than intraday moves, but the extremes are really clearly defined. So the 13,340 level, you could consider that basically like the Rubicon for the NASDAQ, the same way that the 4,200 level is the Rubicon for the SPX, or if we're talking about the ES mostly, again, E-mini, the futures contracts. So because we're in this really clean range, can you continue to play the highs and the lows? I think you can. If we're back at the highs at this point, I think you have extension, right? So if we're back above 13,340, I think that probably is extending at that point. I wouldn't expect necessarily a fake out the next time around. The VIX is down, dropping, volatility's dropping. Normally you don't want to get behind breakouts when the VIX is compressed. It's just not, it's better to trade it's kind of like it's connected. So when you have more range like tight price behavior, you're going to have a VIX that's tighter as well. And you're going to have a VIX that's more compressed as well. So if we ended up breaking towards the high, I think that this is something that, again, we're talking about the S&P probably at 4,200 at this point. That's the last level. Like, we want to get above that level. We want to get above that level for risk assets. If you don't even have to trade the S&P, we definitely want to hold, at least in the S&P, If we look at, one sec, I have a couple screens up here. If we look at the S&P, I mean, you definitely want to hold 4,100 because, again, just looking at sort of this on the 4-hour chart, this is what I was talking about a weird kind of wonky, ugly structure. No real base in this move, kind of just a grind up. This is forming a decent platform, but it's only good if you're above 42. Like, we could only really rely on this and look back on this as a good platform to have built a base off of if we're sitting at the top end of it, or at least spending most of the time there. Right now, again, it's sort of like the NASDAQ. We're just in the middle of that range, and it's not the most confidence inspiring when you have this kind of structure under, because, again, if we lose 41, there's really nothing substantial until you get back down to 4,000. And this is, again, something that you have to keep in mind while you trade BTC, whether you like it or not, because it is it's relevant. You know, we are very correlated to equity indices. No, I don't split the overnight session from market profile. You can do. I used to do things like this. I used to make sure that all of those, my RTH hours, my after hours, are split. Honestly, what will happen is I'll like change a chart book. I won't change that setting or carry that setting or copy that setting over. And then I'll have an old chart book. And then rather than go through all of that and do it over again, I mean, it's very simple, right? I just look at the actual closing prices from Friday. So I'll look at closing price. I'll look at overnight highs and lows, mark those out, keep them on a pad or just either a mental note or, like I said, I use Post-its a lot. And I honestly don't have to look at the chart at this point. I talked about this the last few streams. Like, the chart is such a small part of trading. I look at the chart for a few minutes in the morning. I look at the charts when I'm actually in a stream, but you gather your levels, you gather your areas where you want to get involved, where things possibly will change, where activity will be forced into the market. And then you're either you could annotate and put those levels down on your DOM, or you could set alerts. You could write them down on a Post-it and put them on your screen. You don't have to, me personally, I don't have to make sure that my charting setup is perfect in that regard. You could go on to TradingView and you could separate it so that you only see, like if you're looking at the ES and you have the live data feed, you could only see the regular trading hours. You go ahead and do that. But for me, I just mark off where my levels are, and that's that. Like, I knew where the overnight high was before we ended up taking it out. All right. So are we long or are we short? So I'm currently short. So take a look at that in a second. I will talk about what I have on the top left. But real quick, just to go back over it. So smack in the center of that range, next major area where we might see a bunch of activity forced into the market would be back down at this 1,300 level. So you can see we're slowly grinding down there now. We have a good amount of overlap between the last two sessions, the last three sessions. Center of the range, right? So if, let's say, for example, so just to show you the trades that I ended up taking this morning. And there's nothing that stands out right now. So otherwise, I won't keep talking if something actually arises. So this was the previous session high. So that is your selling tail, a little bit of excess. So as we were coming up to that this morning, so as we were trading above value and above the overnight highs, I actually ended up getting long into that. I didn't think that the market was going to actually top out before taking this high. And then above that high, we were looking for some form of acceptance. So that high is this box right here. And why is that? Because, again, we're back within Thursday's profile. You have a very significant level from that session. So 1350, it's right around 1340 up to 1350 was a really significant amount of participation. I mean, I don't know if you could see because of the way it's zoomed in right now, but this area right here, so now you can see it a little bit easier. This area right here would be an area where I would look for a significant amount of selling to come back into the market. Now we're back obviously below Friday's high, so it's not as relevant. But when we extended above this previously, or rather earlier this session, I ended up taking a long off of this as well. So took a long off of this, looking for continuation, close it out for a few points. Again, you can see the points on the DOM. But what I would want to see right now before getting into any kind of swing, I would honestly want to see that we're able to, if we're looking for some kind of long opportunity, I would want to see that we're able to hold Friday's highs. So something like holding Friday's highs. And then we would look for, because at this point, fuck my drawing tool. Let me just make sure that it's dropping in size. So here is Friday's value area. If we were holding above 13,120, I mean, at that point, we already have our selling excess up here. At that point, would we stop again at the same level? Well, we'll probably look for that reoffer. So I think the first thing I would look for is not the long. I would look for, if we're trading back up to this blue box, right? So Friday's highs. I would look for that reoffer, right? So you can see we've had a really good amount of selling come into the market, post this high. There wasn't a ton of buying behind this move, right? So it was kind of low volume. Last week was low volume. This week's probably going to be low volume. But what I would look for is a reoffer up there. So what that means is, let's say we're basing out right here, today's POC, building a good amount of volume. We end up squeezing back to test that. I would look to see if there's that same sort of selling behavior at that level, slightly under that level, to actually get short. And then I would want to be short, and probably want to be short through today's session. If we ended up failing at this high again, right? I think that the probability at that point is revisiting that 1300 level. If we end up trading back to this level and we don't see that same reoffering behavior, we don't see sellers kind of step this down, then I think you look back towards that high volume node from Thursday. So that is right around, again, it's right around 13,150. If the market can hold that level, so again, that was where a good amount of buying came in. It's probably stale at this point, right? You could imagine that a lot of the buying that came in here, there's a good chance that it flushed out in Friday's session. But if we come above 13,150 and we're able to hold that, well, then we're back above the last three sessions, or back above that value area into this composite back here. So that composite is starting on the 16th. And then I think you have a bigger move back towards possibly, my drawing tool stuck again. You have a bigger move from 13,150 up to 13,180, and then you're dealing back within this range. And then at that point, you're back within the range. You're back sort of above midpoint of the range for this higher time frame monthly structure. I mean, if we're doing that, it's obviously looking much better than it's looking right now. And then we'll adapt and possibly start looking for higher targets. But as far as it goes right now, I would honestly look for, and I don't know if this would necessarily be the place I would want to look for that setup. Look for this setup to take this lower. I mean, when you trade TPO, when you've looked at enough TPO charts, you get kind of just familiar with what you're familiar with, right? I mean, you know what you see often, what you don't see often. And there's honestly not a lot of times where I see that we have a buying tail or a selling tail like this where we don't come up to test either that seller or that buyer again. So, this amount of excess, a lot of times you're going to fill that out a little bit. I very rarely see this and then a very big reversal where we don't come back to fill that out or test that. And again, play back within that area. So to qualify that, just make sure I put a line. That excess starts again right there. So, it's that low volume node right there within today's profile. So today's volume profile. So you have high volume node, again, trading back within that value area that we're, again, from Friday's session to Friday's POC. If we're back above that into these singles, so they're not singles, but it is excess, so it does look like singles, then I think that's where I would probably look for some kind of weakness and something to get behind on the short side. I don't want to chase it right here. What would incentivize me to actually take a short if we don't do that? Probably trading back below. Back below today's POC for a quick move. Because again, if we are establishing value between this 13,100 and 13,70 level, chances are because this is coming off of the start of the week, new session. Chances are this positioning sees a little bit of an unwind. So something where, let's say we're trading back below here, unable to get back above this high, drifting lower, and you don't see the buyers are showing up at these lows again. I think you just target the lows of the opening range. So to clarify to someone who was asking earlier about RTH hours on the TPO chart, I don't need RTH hours on the TPO chart because I could see, for example, prior to today's session, what the activity was. So this is prior to the open, pre-open, and then this is the opening range. So this area right here is the first 30-minute opening range. So that closed out at the beginning of this video. So I use the 30-minute opening range. Some people use the hourly opening range, initial balance. Some people use the 30-second open range. I've used the 30-second before. It's not something I obviously hung on to and continue to use. But chances are, so wide open like this. So it is kind of a wide open. I mean, if you look at price from 1360 up to, it's 13130. That's more than an hourly ATR. That's more than, it's definitely more than lower time frame ATRs at that point. It's pretty decent extension off of the open. So a wide range like that, creating this this selling tail, just expecting more rotational behavior. Wouldn't expect this to continue to trend off of the open. I guess that's the best way to put it. So back within that range. So that is the low, that is the high. I think that if you get that failure under here, that POC, we end up just targeting the low of that range. So you got these like small opportunities intraday just for scalps. Maybe we will go ahead and take that trade if it arises. If we'd actually remain under 1390, I'll probably go ahead and pull that early. Now it is lighter volume, so it's probably a better idea to use like a 500 volume tick versus not a tick, but 500 volume chart versus a 1000 volume, which is closer to like a 3-minute or 5-minute chart normally. So I'll probably, so this high right here, I'm going to actually go ahead and sell some of this. Real quick, just because we are trading back within Friday's value. Let's get this to move. Can't. Back within Friday's value, so only one contract on, but a couple points. We're back within Friday's value. There is a lack of follow through on this high right here. So I said I would want to see that the POC is lost. I think you could go ahead and actually, it's worth the risk of selling that a little early. Notice that the CVD had actually made a lower high. So if this is back above 13,104, then I'll go ahead and remove it. But I think I could go ahead and actually see if this is still worth tagging more on early. So I'll leave that on right now. Oh, you know what happened? I didn't adjust my stop. So I was stopped out of that. So let me go ahead and get back in. I didn't even notice that. That was a mistake on my part. So I placed a position and didn't drag. All right. Let's go ahead and you know what I'm going to do? If I do this during the stream, I might fuck something up because I didn't make this adjustment before the stream where I could manually drag my, we'll just keep an eye on this. It's fine. Where I can manually drag the ladder and then place that stop higher. So we'll go ahead. We could probably get that stop up anyway. We'll just pull ourselves out of it manually if we need. But if we see 13,104, I'll probably just place a stop at that point. Go ahead and sell more. That was a mistake. That stop, I should have had the used attached orders, and I was going to drag that, but now we're just going to monitor this manually. So 13,104 is the price that we want to remain below. What was I going to say? I actually like Hakinashi for the lower time frame candles. Just reduces a little bit of noise. And then using this in combination with either a tick chart or a volume chart, I think just is sort of the best way to go about it. So a few points. I want to see this breakdown now. I don't want to see this hold this 1388 level. So ideally we are down below 1380 in the next minute or two. Good amount of selling, but not dropping. Come on, give me some more than that. I'm going to close that out. All right, so that wasn't bad. 19 points. All right. So we'll reevaluate that. You know, just as you can tell, while we are trading, while I'm taking that live and sort of dictating what I want to get behind, that was not the first thing that I mentioned. That was something that just kind of came up in the moment, seeing that buyers were less aggressive behind that high, and we're kind of in a decent area to find risk because, again, that 13,104 level is the sort of the beginning threshold of that tail again. So if that's the area where I technically would rather look for weakness because it's closer to an area where I could define my risk, I'd rather be closer to that and get in position. So it wasn't bad. But I do know that from a probabilistic standpoint, because we're accumulating positioning right in this little region, if we actually end up losing today's POC, just chances are you see a decent flush back down to today's open or today's opening range low. So that would be like, you know, we would get a move from probably 1380 down to 1350, which is not like, it's not massive, right? We're just scalping during the stream. I just took a 19-point scalp, but it was my first idea, and that came up sort of spur of the moment, the one that I just took. All right, so we'll leave that because as long as we're kind of just trading back in, you know, we're back above today's value area. We're at the high of Friday's value, though. I do want to wait for those setups and not go for anything suboptimal. So again, looking at 13,104 to see if we're reoffered there. This looks like it's just going to fucking collapse here. But I'm not going to chase this during the stream. The goal during the stream is just to put points on and do AMA and think out loud. All right, so we'll look at BTC. So first we'll go over what we're looking at right here. Let me just go through the chat. Okay. No offense, Papa. Yeah, no, it's all good, man. Listen, Culture Horse, I don't know if this is your first time around, but I talked for a while. I'm pretty long-winded. I will talk through the offers in the top left. Yep. I do trade alts. I trade alts. Listen, I'm honest about alts, though. Alts are just leverage BTC. That's all they are. Alts are leverage BTC. They're varying. They come in varying forms of liquidity and varying forms of beta, but they're just leverage BTC. And I think thinking like this and knowing that there's flavors of the month and there's certain narratives that benefit that benefit specific alts and specific sectors of alts, but still thinking, for me, being sort of a cynic, and thinking that alts are just leverage BTC, that ends up saving me from marrying anything. So you'll see I will share alt setups, and then I'll be out of them a day later when they don't move exactly as I want them to, because I have nothing else keeping me in them besides that. There's that 1380 to 1350 setup. Let's see if we get it during the stream. Let's see if it does exactly what I said it was just going to do. So 1380 breaks, 1350 trades. Or no, not 1350. Sorry, it's not exactly there. I should be specific so I don't come across like an asshole. It's the opening range low at 1354. So we'll see if we get that. Being like that, so having that approach to alts means that I miss out on some of the major runs, right? I don't capture the low to the high, or I'm not in from the beginning and a believer. I try to obviously be a good trend follower when it comes to alts, but being mostly a skeptic keeps me from feeling that downside that a lot of people feel because they buy into things way more than they should. All of this stuff in my head is vaporware for the most part, minus a few pairs. I'm not good enough to pick those pairs out because I'm not a fundamental trader. So I leave that up to the smarter people. And I just trade them technically. And to me, they're just different forms of leveraged BTC because everything is hyper correlated. So I do trade alts. I filter for a few things. I want to trade where everyone else is, right? I want to trade where everyone else is because that's where the volume is. That's where the open interest is. That's where the setups are going to be. So that's where the eyes are as well. So that's where the technical setups are going to work the best. But, again, that is as far as I go. I will develop a watch list, see how alts are trading with respect to other alts, see how alts are trading with respect to BTC or ETH, whether we're in a BTC regime or an ETH regime. And then I'm trading them kind of just around the strength of majors. And obviously, sometimes there'll be idiosyncratic strength with alts, but for the most part, they're just leveraged BTC or ETH. Yeah, I do trade alts, but I'm not I go through periods where I share a lot of alt setups, and that's just because, and what that means is, so when I share alts, it means they've already moved a good amount because I'm not the guy to spot when they start moving. I know when to start paying attention. I use something like a 20 period on the daily, on the weekly for a moving average, or rather a 20 period moving average on, it's either a 20 period weekly or daily, just to clarify, to filter things. But I'm never the person who's just buying in based on that with alts. That's when I'll get BTC and ETH exposure, almost guaranteed every time that's happened. The last few cycles, I have added spot positioning. But with alts, I don't trust it as much. That is when, though, I add those to a watch list. But if I'm sharing alts, it means they've already put in a pretty big move because that is going to attract more attention and give me the better short-term opportunities that I'm looking for, period. Okay. Yeah, spot stack, absolutely. So I have a much bigger spot stack now because I think the bottom is in. And I caught multiple times from October to November, I said I was buying. And I bought before the FTX nuke. I bought heavily after the FTX nuke. I bought 20,500. And yes, spot stack is completely separate. That is a much longer term view. And it's really important to keep that separate. And for me, it's like, that's why multi-sig is actually useful. And some might find the same use using like a hardware wallet that's kept away geographically or just kept away from their desk because it's not easy to sell that. And spot positioning is not path dependent, right? I don't worry about my spot positioning getting liquidated. If you fuck up a spot trade, for example, a lot of times the psychology is it's easier on you because you think, well, I just forget about this. It'll come back, at least to my break. Most of the time, alts are going to come back to your break even. You might have to wait a month. You might have to wait, unless you're buying like the absolute worst time, the Pico high. A lot of times you'll get saved at one point and you have to be able to get out. You have to be willing to get out at that point. But with leverage, obviously you can't do that. It can move enough against you where you get liquidated. All right. So this chart up here, this is in Silico charts. This is in Silico's platform. It is the best trading platform available. Hands down, bar none. There is no other trading platform that comes close to this. I'm talking about specifically trading. It's not a charting platform. It's not a market data platform. I'm sure they'll add stuff like that, but they are just straight to the point, professional trading platform for professional traders. They have all the advanced order types you will not find on any exchange. They are the platform that a lot of other platforms are copying. They're first mover. And Silico is one of my favorite people on CT. You might see me and him go back and forth, like banter once in a while. But I've always had utmost respect for the guy. Back in the day, I used to like send him ideas for indicators and things when I was more of like a trend follower early in crypto rather than trading crypto the way I was trading the ES and trading the NQ and trading oil. But he's just him, Ozzy. They've created a phenomenal platform. Flood is part of this, so I've spoken to Flood plenty. I've always enjoyed Flood. You hate him or you love him, right? He has an abrasive personality. It's very New Yorker, honestly. But it's the best trading platform. This has Swarm. This has Limit Chase. This has scaling in any way you could think, right? So where you're looking at is limit order that is scaled. I scaled this to weight more heavily towards current prices and then have it distribute a little bit wider and thinner higher up. I think that honestly, I'm willing to remain short biased as long as we're below 29. I think that if I could sell higher prices between here and 29, I'm happy to get what I can get. I'll go over sort of why that is the way it is, and it's not like very tightly defined and why I'm confident in it. But needless to say, I mean, it's doing well now. But this is where you'll find a TWAP as well. So if I want to trade, for example, and I don't work for in Silico or Flood or Aussie or the platform by any means. Not paying me to say this. It's just the most honest interpretation, right? Coming from someone who's used platforms like this in legacy and used tools like this, and then came to crypto, and it's like, this is a fucking like kindergarten. I'll show you real quick. We'll go to so this is scaled because, as I said, as long as we're below, we've been ranging the last few days. There's really no reason to change your positioning if you're short from higher. Nothing compelling has happened. It's not like we've had an egregious funding print. There's still a significant amount of spot selling that shows up, right? Rather abruptly, which is kind of something that would worry me if I was still long. Someone is trying to get out for size when they get the opportunity at higher prices. They smack the bid, almost like they know something. There's no egregious funding print, no major negative funding or ridiculous discount between futures prices and spot prices. If anything, if we look at like Coinbase versus Binance perps, it's a $10 difference. If we look at Coinbase versus Bybit perps, it's tighter than that. So, that's not ideally when you see, I mean, the SPX is not helping now either. Look at that. Ideally, if you're looking for a long opportunity, you want to see that shorts are getting offsides, right? They're getting overcommitted at a low. Price is holding, but they're still aggressively hammering it. They're not being rewarded for their activity, right? Work is coming into the market for no results. So you'll see that backwardation, or you'll see that, if you're talking about a futures curve, you'll see most of us are focusing on front month, or what would be front month, which is perpetual swaps. And you'll see the discount between perps and spot be pretty significant. For a while, it was like $50. It was $50, $60, $70 the entire way up. Every time we had a pullback, funding went negative very quickly, people betting against trend. That started dropping off, right? That was one of the reasons why I sold at 30,004. Added into it, brought my price down to 30,003. Added into it again, brought it down to 30,002. So that was a hedge for my spot. So I sold futures against my spot stack. I'm delta neutral. And then I'm saying I am as of last week. And then earlier this week, the end of last week, over the weekend, I started adding to the actual short. So I'm actually outright short this market. And this is that outright short positioning. Well, this is actually part of it. And the idea is that it seems like there's some kind of informed seller. Not only does it seem like there's some kind of informed seller, that positioning that you want to see, that behavior that you want to see in pullbacks is not there right now. And as far as just price action alone, it doesn't look like there's a lot of strength, right? This is not what I would call like constructive price action or strong price action, at least in the lower time frames. And we're going into, a time when, as I said, sell in May and go away. People are saying like, if everyone's thinking this, then it must be something you should fade. The point is, everyone doesn't think anything ever. You hear this from people that know in the past, they've used it in the past. And you'll see that by the end of May, liquidity, volume will be completely different. Especially, so there might have been periods where this was more idiosyncratic and it didn't follow legacy, but now crypto and legacy they're two dance partners, right? And liquidity will only get worse in legacy, right? And so the moves will be more drastic. If there's any downside move, crypto's going to follow that much more. It'll have more downside capture. And then things will improve, probably July into Labor Day, maybe some tax money coming back into the market. But yeah, I'm happy to hold this short, and I'm happy to get filled for what I can up to 29. In this throwback alone, I was actually short. I started building this position towards the low of this pullback, and then decided that I'm going to use limit orders higher and scale and just see what I can catch, because there's times when the trade, so I'm sure many of you guys hopefully know about expected value, right? There might be a trade where technically you could lose more than you could gain, but you are that much more confident that the probability of success is much greater than the probability of losing. So I am so confident that prices will be lower in the future that I think it is worth tagging on more of a short, even if I think in the interim we can go higher. I don't think we're going above 31K, right, in the near future. I'm willing to hold this position and get filled up to 29. If we, and that's sort of what these boxes are, the point of these boxes, constructive behavior below 26 or above 29, and that's when I'll possibly close out my hedges, close out the short, and look for more long opportunities to add bigger positioning. Not intraday positioning has nothing to do with this. This is just about spot. This is just about portfolio. And in particular for this swing trade that I'm in, which is short. But as long as we're in this range, just look at what this range did last time around. So again, just the last couple of days, I mean, we're within a multi-day composite at this point. This was that low volume gap. We're just filling that out. I mean, the chances of us trading even higher and then marking down lower, I think are quite significant. And then because we're back within, I mean, just as a reminder, this range was chopping both sides of the market up. I think it's easy for us to do the same thing in this range before resuming to lower prices. And I don't want to overthink anything until that happens. And cleanly defined up here in the sense that if we're back above that range where we fought it out before, then I'll just close this positioning out. But before that, I don't want to manage swings within here. I'm just going to let that short positioning ride. I'm really happy with also the position that I ended up hedging my spot BTC, right? So 30,000, it's between 30,004 and 30,200, which is obviously much better than where we're currently sitting right now. So what else? Let's see. Is there anything else? Where are we right now? So, okay, we got those prices. We're below the opening range. I mean, chances are now we're just going to continue down to 13, right? I mean, we're not there. We're right above it, but the S&P looked like it put in a pretty firm move. I don't know if that was off of anything. But again, just remember, OPEX now, no pinning. No pinning whatsoever. Price has a wider range to move. So it was stuck between 41, 41.50, shut down at 42. All these strikes were significant in terms of open interest and positioning that it accumulated into that expiry. Now with all that gone, technically price can move a little bit more freely. So I think that the move that happens after this week is probably the honest move, right? If we're moving lower, I wouldn't get too bullish over the summer. If we're above 42, maybe we'll have some kind of melt up over the summer. And again, the level is so cleanly defined that you don't have to think too much if we're back above there. Yeah, I would definitely, I would love to check out Quinta. Oh, so Arkham. Yeah, I'm going to do that giveaway. I actually, I was supposed to pull the winners for the stream, but I'm going to post them right after the stream. Because there's chances are that the people that participated in that, what I said I was giving away the access, there's chances are they're not watching the stream right now. But they did, if they did share the post, if they did like the post, then they deserve to be part of the drawing. Or what happens is I'll do a giveaway on a stream, and then someone won't realize that they won, and then it just gets messy. Only 6 out of the last 11 Mays have been down or sideways. I mean, that's half of them, right? It's kind of. And then if you think about the most significant summer we had, that was, I mean, the last. Let's see. So if we go to. Just blow this up. Weekly. So last summer, coming off of all-time highs, kind of looks like that move so far, right? COVID summer, which is completely different because that's on the back of a ton of liquidity coming into the markets. This is beginning of summer, sideways. It's not a whole lot you could glean from it, but what you can say is that every single summer that follows, we're getting more and more correlated to legacy markets. So you pay more attention to what happens in legacy markets and how legacy markets are influenced. And seasonality is absolutely a thing. And when it comes to sell in May and go away, it's one, it's tax reasons. So some of that money comes back in before Labor Day. There are just, people they're not as active in markets. So there's not going to be as much liquidity. There's not going to be as much volume being traded. So it doesn't, the exciting times to trade are the times that are worth it when there is liquidity for almost everybody. It's not during the summer. And you should just take your summers off anyway. Like, who wants to sit at a fucking computer during the summer when it's nice out for most people? So I think you have to understand how from previous summers the market has changed as well. Here we go. Okay. It's a good time because, let's see. Let's just one last look at things. So I'll ask you guys real quick. What is the most important thing when it comes to a stop? So what is a stop to begin with, right? How do we define a stop? Or what are some of the ways to define a stop? Yeah, 2 week. Yeah, I am set with vacation so far, so happy about that. This looks like continuation down. Okay, most I'm willing to lose in a trade. Okay, so that's one of the things you have to determine, right? How much risk you're willing to take per trade, right? And then you are creating a stop around that. So if you're willing to risk 1% of your portfolio per trade, right? Just static across the board. And the trade, so that's one part of it though, right? As the Shah just mentioned, where your trade gets invalidated, Matt said where your idea is wrong. Cornholio, same thing. You guys are all touching on the same thing. So those are obviously going to be two different things, right? How much you define, and a lot of times where your trade is wrong. Okay, so you have, for example, you're willing to risk 1% of your portfolio. Now, applying this across the board is kind of silly sometimes. If you're a scalper, it makes sense maybe to have fixed stops, right? Always, because no scalp is really different from the next. If I'm trading NQ or ES intraday, and I'm looking to capture rotations, and I'm seeing there's a certain cadence of price action, there's really not a whole lot that makes one trade different from the next, right? From a probabilistic standpoint, I'm not going to be thinking too much within the day. Oh, this trade's much better looking than the last one that happened sort of the same. I'm going to take more risk for this trade. Technically, you should, at some point, identify the setups that you take, right? It might be different from setup to setup, though. Maybe extremes, you take a different trade. Maybe when you're at range extremes or trading at extremes, that's where I like to get involved the most. You're going to take more risk than if you're trading in the middle of value, right? Because price is more rotational. It's more along fair value. There's a whole lot to glean from that with a whole lot of conviction. So there are times when you should be able to identify what your best trade setups are, right? Your shots that you have in your bag, and the ones that you do really well on, right? Hopefully you're journaling. This is one of the most important parts of trading. You could say, okay, I hit the ball out of the park with that setup. Oh, I fucking duff it on that setup, right? So this setup that I trade really well, it could be based on many things. I'm going to take more risk on that setup, right? It's sort of like having a good hand in poker. You're not going to bet the same across the board. You wouldn't be a good poker player. So same sort of thing applies in trading, with obviously certain differences, but without getting into all that. So yeah, you have to know where your trade's invalidated. You have to define your risk. So if you have a 1% risk of your portfolio, you found a place that invalidates your trade and it's 3% away, well, then you're going to take a third of the normal positioning sizing to accommodate for that distance, right? Because it's not always going to be the case where you're set up with that perfect 1-to-1 invalidation, right? So Now, right? So you have that. Let me just look at the chat real quick. Okay. So you have your invalidation. Your invalidation, that's going to be up to you and up to your approach, right? This is the part that most people should start refining, though, because you have people that are swing traders, that are scalpers, that are position traders that are all using sometimes the same stops. And these are actually good locations for you to trade because, again, they are sort of areas that the market all look to. For example, like your high time frame levels. This is why there's a ton of activity at major swing points because it's an area that a lot of people can focus on, define positions around. And the bigger you go, the higher the time frame you go, the more likely you're going to have more money behind that level as well, right? Because big money, big swing traders, big position traders can't get involved intraday in those little 5-minute ranges. They need the market to come to extremes. They need to gather a lot of liquidity or get involved where a lot of liquidity is there's a lot of liquidity exchange, a lot of positioning exchange, a lot of turnover. So you have a lot of people, though, that define their position. You have a lot of different strategies that actually define their positioning around the same thing, right? If you're a swing trader, if you're a trend follower, and you're just using market structure, that's kind of silly, right? Because the trend is not necessarily just defined by market structure. If you're just reading a TA 101 book, yeah, that's one part of it. It's like the stupidest part, though. It's a series of higher highs and higher lows, right? If you apply that too rigidly, you're going to get left out, okay? Because the market doesn't just move up perfectly in a series of higher highs and higher lows. Sometimes it takes a little bit of a breather, comes back into the prior range, right? Or the prior high or prior low. It might be defined at that point by you as being invalid and broken, but really it's a little bit of variance, right? Maybe the context shifted a little bit, market, liquidity was pulled, market pulled back a little bit more, invalidated that, but then the energy behind the trend, the buyers, and they're not stopping at that point, the trend resumes and you're out of the trade because of market structure. Trend followers should use things that define their trend. So market structure is one way, but then you'll have people that use moving averages, right? So you'll see moving average stops are good for trend followers. So whether it's a multi-day close, whether it's if you're looking at the daily 20, the 50, the 100, whether you're looking at a crossover and a close, these are things obviously that don't necessarily imply that market structure was lost yet because you could be well above, a prior high or low when this happens, right? But again, it's a way that sort of the way you're defining the trend is also the way you might get out of the trade, right? So if the trend is when the 10 crosses the 20, this is just one example. It's obvious. A lot of other people probably have heard this. A crossover in the opposite direction is when you start to look for weakness and possibly exiting the trade. This is not what I'm getting at, though. Everyone should have an idea of what a product's ATR is. So I want to get more into this. So someone pointed out using ATR multiples. So you should define the trend and you should define your trades with some incorporation of normal price behavior. What is considered normal? Because you don't want to be stopped out, on a move that is considered normal for the day. So what I think is you should always do is, even if you're a trend follower in the higher time frames, you should incorporate some measure of ATR into that stop, right? If price on average moves, 1,000 points in a day, and you're looking at trading a 1 week long trend and you're looking at possibly returning 3x that day, that day's ATR, maybe 3,000 points, you're looking at trading from one weekly level to the next, you better not have your stop tighter than 1 day's ATR, right? So you're a trend follower, you've got in position and the day's ATR is 1,000. You're not going to place a stop for 200 points because the point is, price can move 200 points against where you got involved and still be completely reasonable as far as being still in the higher time frame trend and not invalidating any setup. So based on what you're trading, you should always incorporate some level of that time frame's ATR. So if you're a swing trader, the daily ATR. If you are an intraday trader, you should always have an understanding of what your 5-minute, your half hour, so your 1 TPO range, and your hourly ATR is. This is going to help you place stops that are just outside of the noise. But the point is, it's not market structure is bad. It's that you incorporate this with market structure. So you don't just look at a low and say, if price breaks that low, then we're fucked, right? If price is ranging, price is going to be tagging a bunch of highs and lows, right, within the structure. What you want to do is actually incorporate the ATR into that swing point. So always want to get as close as possible to that invalidation. But then if on average price is moving 100 points, the average half-hour range for Bitcoin for the last couple weeks is 150 points, then what business do you have trading intraday with a 30-point stop, right? That's like a scalper stop. No, you should at least incorporate one ATR into your stop. So if you're trading, for example, and we're trading today's session, and here are some of the ATRs actually. So 139, 102, 92. So the average ATR is around, for the last couple days in this range, 139, 102. So the average of that is around 120, 95. We'll just say it's 130, right? This is a 4-day long range, multi-day composite. Price behavior within that in a half an hour, right, or even outside of that, is completely normal. So if price moves 100 points in an hour, that's normal, right? That's the half hour's normal range. If price moves 190 points in 2 hours, that's normal, right? So if we're looking at highs and lows and you're looking at getting involved at extremes, my point is a lot of people will just use, for example, here is, let's say the lows of the last, this is kind of an ugly setup. This is why maybe targeting lower price is even better. You have the excess at the high after taking these highs, and then you have these even lows, and you don't have a lower low at this point. You don't have any kind of liquidity grab below this low. But let's just extend this. Let's say you're looking at getting involved at one of these extremes. So the low is 135. That's 150. Placing your stop right there at 27, at 27.90 is pretty dumb, right? It's pretty dumb. Because the point is, that is normal price behavior. If we ended up, like, let's say we open up the next 30-minute candle, we come down, we rotate down towards the low, we're trading down here, and we have a spike of that level that's 130 points, that is par for the course for the day, right? There's obviously going to be a distribution that you have to pay attention more than the average. But you can imagine, lately this has been the case that it's around high 2 digits to low 3 digits. So as far as the 30-minute range. So you want to at least make sure your stop is outside of that value. Because the flip side of that is, if the norm is that we are ranging, right, and we trade into an extreme, let's say we trade into an extreme on that value, right? So 30-minute candle into the high or into the low, nothing major changes in terms of price action. We're just rotating like that. That's kind of normal, right? It's probably fade worthy. If we end up taking out the low and in a 5-minute candle, it's 190 points. Well, wait a second. We just did the 30-minute range in less than 5 minutes. Something stands out. Maybe it's something worth getting behind as far as change rather than continuation, and not continuation of the bigger move, but continuation of the range, right? So rather than expect continuation of bracketed behavior, we have a move that is through the low or maybe through the high that is multiples of the 30-minute ATR. Okay, this is something that's different, right? Maybe something is amiss, right? This is something we're going to get behind rather than fade. Anything from the center to the extremes around that ATR is probably fade worthy. So if we put in an impulsive move from fair value towards an extreme, and it's 100 point move, right? 150 points, that's pretty normal. That's probably fade worthy. But the point is, it's one thing that you should have an understanding of, the ATR, right? If you're trading something every day, you better know how much it's expected to move. If you're not incorporating this into your stops, then you're just leaving out a major component, because you're exposing yourself to possibly getting taken out of trade just purely based on normal behavior. There's a lot of other stops, though, that are based on far other, more things than market structure and the range of price behavior. You might have a stop that's based on, a pocket of volume that came in, and your invalidation for the trade is, hey, a bunch of open interest came in around this level. I know that if we're below that level by a few points, they're going to start rolling over, right? So that's different. But I think that not enough people take this into consideration. It's just something you should know your ATRs for the weekend. You should know your ATRs for weekdays. You should know your ATRs for the Asian session, for the New York session, the London session. You should know, for example, if you're a stock trader, what's the ATR of this product after earnings, before earnings, into OPEX, right? In the summer, during hot trading hours. Again, it's just becoming very familiar with your instrument. And the more you do this, the better off you'll be, right? Because you'll be able to spot, oh, that stands out, right? What's different about this? If nothing's different, then why am I going to expect change, right? It's also the difference between determining whether or not there's continuation and balance, or whether there's imbalance and, right, possible change and trend, trend beginning to occur. Or if you're a trend follower, what has defined that trend might be a certain ATR, right? When that begins to drop and market begins to compress, okay, maybe a trend is over, right? Maybe we're beginning to find a bottom or a top. And then the last thing to consider is when it comes to position sizing, volatility regimes. So if you're an equities trader, the position you take is going to be different if the VIX is at 16 versus the VIX is at 30. If it's not different, then you're probably not going to make it, right? If you're trying to take breakout trades when the VIX is at 16, you're probably going to have trouble. If you're trying to trade a range when the VIX is at 30, you're probably going to run into trouble. So the regime that you're in should dictate how you position yourself. You should never just have one static approach to the market. The sooner that you get better at refining these things, the sooner you'll be more successful in your trading. And I think that's it, guys. So we ended up putting a couple points on the board during the stream. We can't get back inside that opening range right now, but not a whole lot taking place to get in position here. I think that when you have setups like this, you have a good amount of positioning coming in between this, in this pocket. One sec. Let me just change this. I would look for just based on the way price is stalling out in here, I would look for the trap setup under 1310. So are we going to have some kind of puke down now after we've built up this value and then reversal? You see that a lot in the ES and the NQ. You see this trend down, forming a little balanced area above that. Looks like, oh, flag continuation, and then this offers a quick trade right back to this high. So just let's see if we get that right now. Otherwise, the next area you're looking for the NQ sub 13 would be that tail around 980 and 990. And beyond that, I mean, you're not going to stretch it too much because that is the low of this monthly range. So the indicator for this is ATR. So for example, if you're using a TPO chart, your average sub-period rotation is your 30-minute ATR. So this ASR, that's the 30-minute candle range. If I were to look at BTC and tag on an ATR and go onto the 30-minute chart, you'll see that it is showing me that same value. So 30-minute ATR, daily ATR right now is 1,000 points. So there are other indicators that bracket this. So for example, the ES, you have that one-day ATR bracketing price. Everything within there is more or less just expected behavior. Counter channels does that as well, because you're using ATR and standard deviations of that or multiples of that. Great point. I forgot about that. So we'll just pull that up for everyone so they could see. And then what this is going to do is going to use a multiple, probably standard of 2. Yeah. And then if we were to put, for example, my ATR, I think is a 7-day. 14 actually. So 14. And now looking at 47, 66. So we got 2x ATR up, 2x ATR down. And you can adjust that as you want. All right, guys, I think I'm going to wrap it up. Yeah, hopefully that was a helpful stream. Leaving these here, like I said, I will look to manage under 26 or above 29, but I can't see a real reason to change anything drastically right now. Things that stand out as far as BTC, we filled out this low volume node. Fair value is pretty obvious, right? It hasn't gone anywhere in the last 3 days. What does stand out is you have this excess now above the highs, and you have some pretty ugly lows. So looking for a run there. That's it, guys. I'm so tired right now. My daughter was equally tired when she woke up, though, because she didn't sleep much. Hope you guys have a fantastic evening. Make sure you hit the like and subscribe button. Leave a comment if there's anything you want to talk about during the next stream. And next stream, I'll